In the realm of personal finance, the adage, "time is money," takes on a profound meaning when it comes to investing. The decision to invest earlier in life is not merely a matter of financial prudence. It's a strategic move that can significantly shape one's financial landscape in the long run. As we navigate the intricate world of investments, this article delves into the compelling reasons why initiating your investment journey sooner rather than later stands as a crucial and advantageous decision. From harnessing the power of compound interest to mitigating risks and strategically aligning with long-term financial goals, the benefits of early investment reverberate throughout one's financial future. This exploration aims to shed light on the myriad reasons why the early bird catches not only the proverbial worm, but also the potential for substantial wealth accumulation and financial success. Number 4. The power of compound interest. Embarking on an investment journey early in life offers a significant advantage by capitalizing on the compelling force of compound interest. This financial phenomenon acts as a catalyst, allowing the returns on your investments to generate additional earnings and setting in motion a snowball effect that can profoundly enhance your wealth over time. The key to unlocking this potential lies in the extended period during which your money has the opportunity to compound, a process where both the principal amount and the accumulated interest earn further returns. To illustrate the impact of compound interest, consider investing $1,000 at an annual compounded rate of 7%. After just a decade, the investment would grow to approximately $1,967. However, the real magic happens when you extend the investment horizon to 30 years. The initial $1,000 not only multiplies but undergoes a remarkable transformation, ballooning to an impressive $7,612. This vivid example underscores the exponential growth potential inherent in compound interest over an extended period. The compounding effect is akin to a financial snowball gaining momentum as time progresses. Even with modest initial investments, the continuous reinvestment and growth create a compounding snowball that can result in substantial sums. This emphasizes the profound benefits of initiating investments at an early stage, as it maximizes the time available for this compounding process to work its magic, setting the stage for long-term financial success and wealth accumulation. In essence, the early commitment to investment not only amplifies the monetary returns, but also exemplifies the strategic advantage of leveraging time in the pursuit of financial prosperity. Number 3. Mitigating risk through time. Engaging in investments carries inherent risks, with market unpredictability looming in the short term. Yet, the length of your investment horizon plays a pivotal role in navigating through market fluctuations and economic downturns. Initiating investments at an early stage grants you the invaluable resource of time, offering a buffer for your investments to rebound from temporary setbacks and potentially flourish over the long haul. Examining historical trends, the stock market has demonstrated a propensity to exhibit an upward trajectory over extended periods, notwithstanding short-term volatility. By embarking on your investment journey early on, you strategically position yourself to harness the benefits of these enduring market trends. This proactive approach not only allows you to endure the inevitable market oscillations, but also positions you to capitalize on the overarching growth tendencies that have historically characterized the stock market over the long run. In essence, starting early becomes a strategic advantage, aligning your investments with the enduring and upward movements that define the market's historical performance. Number 2. Harnessing the power of dollar-cost averaging. Regularly investing a fixed amount, irrespective of market conditions, constitutes the strategy known as dollar-cost averaging. This method offers a distinct advantage by enabling investors to purchase more shares when market prices are low and fewer shares when prices are high. The beauty of this approach lies in its ability to mitigate the impact of market volatility. By consistently investing over time, you create a steady and disciplined approach that cushions against the fluctuations in the market. Embarking on your investment journey early opens the door to leveraging the benefits of dollar-cost averaging. This strategic move not only allows you to navigate through the ups and downs of the market, but also holds the potential to reduce your overall average cost per share. In essence, By adhering to a consistent investment pattern, you position yourself to optimize the advantages of dollar cost averaging, creating a more resilient and cost-effective investment portfolio over the long term. Number 1. Long-term financial goals. Investing, as a strategic financial practice, frequently intersects with individuals' enduring aspirations, ranging from securing a comfortable retirement to owning a home and funding education. The pivotal element in realizing these long-term financial goals lies in the initiation of your investment journey early in life. The significance of this early start is underscored by the invaluable resource it provides: time. This temporal advantage allows your money to undergo a process of gradual and compounded growth, actively contributing towards the realization of financial aspirations. Consider the example of building a robust retirement nest egg. Starting the investment journey early not only aligns with the goal of retirement security, but also harnesses the power of compounding. As time progresses, the compounding effect enables both the initial investment and the accumulated returns to generate additional earnings. This compounding snowball, gaining momentum over the years, can potentially result in substantial growth. The advantage of time is a critical factor, as it allows for the weathering of market fluctuations and the ability to navigate through various economic cycles. In essence, initiating your investment journey early is an instrumental step in translating financial aspirations into reality. It offers the luxury of time, enabling your investments to mature and accumulate wealth gradually. Whether it's the pursuit of a secure retirement, homeownership, or funding education, the early commitment to investing establishes a framework for achieving these goals and contributes significantly to a financially secure and fulfilling future. Similarly, early investments play a pivotal role in accumulating funds for a home down payment. The time horizon becomes a crucial factor, as it enables you to navigate market fluctuations, benefit from appreciation in asset values, and strategically plan for the milestones associated with homeownership. This proactive approach not only fosters financial stability, but also positions individuals to capitalize on growth opportunities that may arise over the course of their investment horizon. In essence, commencing your investment journey early is akin to sowing the seeds for future financial success. It offers the luxury of time, allowing your investments to mature and align with your evolving life goals. Early investments serve as a proactive and forward-thinking strategy that not only contributes to financial security, but also empowers individuals to proactively pursue and achieve specific milestones on their financial journey. Conclusion: initiating investments at an early stage emerges as a formidable strategy, wielding a profound influence on one's financial future. The amalgamation of factors like compound interest, an extended presence in the market, the discipline of dollar cost averaging, and the resilience to withstand market uncertainties collectively positions early investors for enduring success. Acknowledging the significance of commencing the investment journey ahead of time empowers individuals to unlock the full potential of their financial resources. This strategic approach not only aids in achieving diverse financial goals, but also lays the groundwork for the substantial accumulation of wealth over the course of time. It's crucial to bear in mind that while the ideal moment to start investing may have been yesterday, the next best opportunity is unequivocally today, emphasizing the perpetual relevance of initiating investments promptly. Do you think you'd enjoy it? Click the like button and subscribe to our channels for more videos that are not only entertaining but also educational.